Hey everyone, Chad Trades here. In this video, I'm gonna be breaking down exactly how I made over $2,000 in 15 minutes day trading SPY options. So in this video, I'm gonna break down the exact trade I took, where I entered, why I entered there, where I exited, all the stuff you need to know. So hopefully you can get some value out of this video and education for your own trading journey. So that being said, no more time wasted. Let's go ahead and go into this trade recap along with some other tips to help you make money trading in the stock market. All right, so as you can see, this trade I want to talk about in this video was on Tuesday, February 14th, just a few days ago at the time of recording this video today. So as we can see, we ended up making around just over $1,900 on this trade. It was around 26%. Yes, I am trading options. My expiration date was 2 days out, so this was not 0 DTEs or anything like that. So as we can see, it ended up costing me around $7,600 to take this trade, but I only risked $660, right? So I risked $660 to make, $1,965, which means I had a 3 risk to reward ratio, which is always where you want to be, somewhere above that 2 to 3 range risk to reward. So anyways, let's go ahead and break down this trade and kind of show you where I entered, where I exited, all that good stuff. So hopefully you can get some value and some education out of this video. So as we can see, we entered this at 8:20. This is Mountain Standard Time. So when I did enter this, the contracts were at 255 and I scaled out, on this initial move down, and then again on this move down, and one more time on this big flush we had. Obviously it kept going lower, but those were my 3 scale out trades. So let's go ahead and go back into the charts. Again, this was trading SPY, so I always look at the ES when I do trade SPY. So with that being said, let's go ahead and talk about this trade. So this is right after inflation data came out, around an hour before the market even opened. Okay, so let's go ahead and go into the 5-minute chart so we can really see what's going on here. So as we can see, this was Tuesday, like I said, down here, and I'm gonna zoom into this chart. Okay, so you see where it says 6:30, so this chart is set up for Pacific time. So this is when the market opens. Initially right here is where the market opened, on this green bar right here. Okay, so basically what happened was in pre-market or the day prior, we were moving up. We're moving into the supply zone that we previously sold off into. So around a week ago, we sold off into the supply zone, and as you can see, we had a massive move down. So this tells me there was a lot of sellers in this zone. Okay, so once we started trending back up, we came to this demand zone and we trended back up the day prior, right? So this is the whole day prior to when I took this trade. And then pre-market, we started to slowly slowly grind up until inflation data came out. Okay, so let's go and see what happened when inflation data came out. So as you can see, there's a massive spike up into the supply zone. This zone was still valid because as you can see, it immediately wicked down and it basically dropped all the way to this previous demand zone that we bounced off of, basically the day before this, right? So as we can see, me personally, I don't like to trade the first 10 minutes of the market open. I personally just think it's a gamble, even if we were in a demand zone. So as you can see, the market opened right here. We literally got to this demand zone, so this could have been a valid trade. Again, I don't like to trade the first 10 minutes, and by the time the first 10 minutes were up, we're already, midway through the zone. So at this point, there was not enough risk to reward for me to actually take the trade. So my game plan going into the day, and really I don't like to trade the first 30 minutes of the day a lot of the times. So my game plan was just to kind of see what price action was doing, and my A+ setup was getting all the way back to the supply level where we previously sold off, not just in pre-market from this data, but also, the way we got this supply zone in the first place was this huge move down. Okay, this massive move down we got just last week, the last time we entered this zone. So this basically tells me that there's a lot of big sellers who have limit orders in this area, and a lot of times those limit orders stay set, right? They don't cancel those orders, they stay set at that price because the chart is showing us that's where big money is selling. So as we can see, that's exactly what I did. I waited until we got into the zone. Okay, so now just because we got into the zone doesn't mean I immediately took the trade. what I want to do is not only make sure we're getting in the zone, but what you really want to do is you got to think of it as the zone is going to tell you where to take the trade. Okay, so I know potentially I'm going to take the trade. I'm going to buy some puts in this zone. This is going to tell me where. So once we got this, the next thing you need to look at is your confirmations, price action. That's going to tell you when to take the trade, okay? So there's a difference between where and when. Just because we're in a supply zone, that tells me where. It doesn't tell me I'm going to actually take the trade. It doesn't tell me when, okay? So when I took the trade, let's go ahead and go back and see my first entry I scaled in. My full position, 30 contracts at 820, which will actually be 720 on this chart. This chart is on Pacific time. I know, a little confusing, but yeah, so basically I took the trade at 720 on this candle here. Now let's go ahead and talk about why I took the trade right here. Okay, so if we zoom into this, and keep in mind this is the 5-minute chart. As we can see, we had it go just above the supply zone. We had another supply zone right here. So this whole area was kind of just had a lot of sellers, right? So as we can see, we immediately wicked down, okay? So whenever you see these wicks, that kind of tells me that sellers are more in control. It tells me that price action is looking more weak, okay? Next candle, we never got above this previous candle, which told me sellers were still there, and we closed, you know, a red bar, right? So this told me that, you know, again, price action is looking weak. Every time it tries to get above this zone, we end up selling off, right? So this is where I got in. Once this candle closed, this 715 candle, I got in at this candle with a stop loss above this initial wick right here. Okay, so that's why when I go back here, I said I was risking around $660 based on the actual contract I was trading. Okay, so as you can see, the contract I believe was right here, 233. That's where I would have stopped out of this trade, right? This contract. So anyways, that was the plan, you know, so either what was going to happen was I was going to stop out or the trade would play out, and it eventually did, right? The next 5-minute candle was a super bearish candle. I believe I scaled half of my contracts out of this position on this big flush, because at this point I already had a 2-to-1 risk reward, right? So my risk, I was risking about, you know, a few points on this zone, and we already came down, you know, double that amount. So probably came down like 5 or 6 points here. So I scaled out half of my position, as we can see right here. If we go back, scaled out at 828. Okay, so this would actually be 728. So somewhere on this candle, this is where I scaled out, somewhere in between here. And then we got another flush down, I scaled out again, and then on this candle, during this candle, this is where I sold the remaining of my position. So at this candle, I was completely out, somewhere around halfway through the zone. Now, of course, I could have held it all the way back to this demand level. You know, this is a mistake I make a lot, is selling too early. But this is the trade I took. I was happy with the trade. I was happy with my profits. $1,900 off $7,600. That was a good trade for me. That was an A+ setup, and even better, right? Price action worked out super quickly. Pretty much every 1-minute candle was a red candle. And the reason being is because this is a higher volatility day, because we just got inflation for that day. So just keep in mind, when there's big news days, there's usually going to be more volatility, right? So meaning you can lose money faster, and you can also make money faster, right? So you always just got to be on the right side of the trade, obviously. And if it doesn't go in your favor, if we got above this zone, this is where I would stop out, right? I entered here, we got close up here, but you know, it ended up playing out. So if there's one thing I want you to take away from this video, guys, is knowing this: your supply and demand zones is going to tell you where to take the trade, and the price action, the candles, the confirmations that you have for your own trading system, that's going to tell you when to take the trade. All right, so hopefully you enjoyed this trade recap of exactly how I made over $2,000 in 15 minutes day trading SPY options. If you guys want to see more videos like this, you find it helpful to show you my trades, be sure to drop a like on this video and subscribe if you're new to the channel. And also, if you want to learn exactly how I trade, my exact day trading system, be sure to download a free copy of my day trading guide. It's going to show you the 5 steps I use to profitably day trade in the stock market. So again, if you want a free copy of this guide, all you have to do is click on the first link in the description below, or just head over to this link right here and you can download it for completely free. With that being said, guys, as always, I hope you have a great rest of your day. Trade smart, trade safe, and I will see you in my next video.